So we've left behind the easy part of the chapter, and now we're going to start to talk about something a bit more obscure, a bit more ephemeral. We're going to talk about financial capital. So financial capital refers to the international flows of money that facilitates trade and foreign investment. Well, foreign and domestic investment. All investment. Trade balances are inexorably, however you spell that word, inevitably, intractably, you can't. It's just it's inevitable. It's unfortunate, but it's just the way it is. They are inexorably. I don't even know if that's a word now. Trade balances are tied to international flows of capital. So much so that economists will describe the balance of trade as the balance of payments. And we're going to talk about that in a bit more detail in the next graph, talking about how each category of the current account balance involves a corresponding flow of payments between countries. So let's take a look at that right now. So each element of the current account balance involves a flow of financial payments between countries. The top line shows the exports of goods and services leaving the home country. The second line shows the money that the home country receives for these exports. The third, actually that is not correct. So the second line is talking about our investment income. So this second line is the money that we receive from all of our foreign investments, foreign assets. So this is, we'll say, all of our U.S. owned foreign assets. It becomes more complicated here because now we have to essentially modify assets by two different adjectives. One of them to modify whether it's a foreign asset or a U.S. asset, and one of them to modify who owns the thing. Because it could be a foreign-owned foreign asset, or it could be a foreign-owned U.S. asset, or it could be a U.S.-owned foreign asset, or a U.S.-owned U.S. asset. Our third line that we have here, that's just our imports that the home country receives, the U.S., and our fourth line is the payments that the home country sent abroad for their, so hold on, we'll do this in a second. Payments from home country to foreign for foreign-owned U.S. assets. Does that make sense, that naming convention? So we have to say who owns it, and then we have to say what type of asset it is, because it could be, you know, stock in a United States company, or it could be a stock in Samsung, right, which is a South Korean country. And so if you have some stock in Samsung and you receive a dividend, right, which is a yearly payment in terms of, you know, they give out so much of their net income and dividends every year, that would be over here in the second line, right, the investment income. If we talk about investment income paid from the United States, right, the investment income paid from the United States, one of the biggest ones that we talk about right now, as our interest rates are increasing, is our national debt, right? Servicing our national debt and paying the interest on all of our treasuries, our United States Treasury bonds, is becoming more and more expensive. So that's where those those flows would fall. So any questions on just kind of the flow of what's going on here? It's very similar to our circular flow diagram. It's just got different flows, and instead of, well, no, it's very similar. But instead of firms and households, we have home countries and the rest of the world.